Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you very much for being here. As always, it's a pleasure to share my views with you. And today I want to share some of the charts that I shared before, and let's try to update some of those patterns that I shared before. And I also want to share something that may happen for Bitcoin and eventually should be followed by Ethereum also. So let's see. Let's start with Bitcoin. Let's start with Bitcoin and let's go into a lower time frame. So I'm a bullish, of course, long term. I remain bullish for Bitcoin. But of course, at this point, we have a new fractal resistance. So at this point, we need to wait for the violation of those 61,781 previous highs and major resistance at this point. So we need to wait for that to happen. We have also the formation of this kind of triangle here, or kind of, well, a bullish structure. So I believe the market needs to trade even higher above this trend line resistance. I admit a violation of this trend line as a trigger for more upside momentum, but of course we need to wipe these. We need to violate, to trade above this fractal resistance above. And above, I really don't know where the market goes. I have no specific ratios here pointing into a specific Fibonacci level above the fractal resistance. And I don't think the best option at this point is to search for a sell opportunity, but instead of, actually at this point I believe we should search for buy opportunities for Bitcoin. So, and of course they can fail, and if that happens, we need to assume that we were wrong, and we need to move forward as always. So let's go into a lower time frame because I want to share with you a specific. Let me delete also those trend lines here. I will draw them again later if necessary. And in fact, a trend line is, as I said yesterday, a trend line is it's only a guideline. Let's say it allows you to identify the structure the price is building or it's forming, and so sometimes it may act as a trigger point because big institutions are always paying attention to those levels also and to those type of structures. So we believe that a violation of a bullish triangle should be followed by those big institutions. So let's take that into consideration. I don't use a trend line as a trigger point or a element to or a variable to trade or to push the trade. But it's important to take those structured trend lines into consideration. So, as you already know, I searched for advanced pattern formations. The last one that I shared for Bitcoin was this bearish cipher pattern. The bearish cipher pattern is usually formed by 4 major swings, as you already know, and basically we search for that 78.6 to be reached in order to complete the pattern. So since the market once the market completes the pattern, we expect a retracement. So we expect the market to start to fall without violating the previous structure highs and the starting point of the pattern. And in fact, what we have is a retest of those highs without rejecting, without trading higher, without breaking above this structure resistance level. So that being said, the pattern remains valid until the market violates the previous structure highs, as I said. And that being said, initially I was searching for a retracement back to the 38% fib, so I expect the market to complete the pattern and to fall into the 38% Fibonacci retracement level. Of course, the market was pushed into the previous structure highs. We need to adjust that Fibonacci into those highs, and as we can see, the market has found some pressure. The 38% Fib, actually a few points below. Daily fractal, the most recent one at the bottom, the most recent lower lows. And what we can have here is something similar as a bullish bat pattern. So if the market decides to retest these lows, which will put the price, as I showed you before, at that trend line, it may put the price trading at this trend line resistance or trend line support. Actually, it needs to break this trend line. In fact, it needs to trade below that structure and print what we may call kind of an outside return. So eventually I will search for the bullish bat pattern at 88.6% Fibonacci retracement level, and I will expect a 38% Fibonacci retracement. So, and eventually the market will recover the structure again for more upside momentum. So I will wait for, so note that the bullish bat pattern, the default target, and taking into consideration this trend line, will suggest a retest of that trend line, and will also suggest a retest of the most recent structure support level. So if that happens, I believe the market may find some pressure as soon as it touches the previous structure lows and the 38% Fibonacci retracement level. But I will not be surprised to see the recovery of this structure, and that's the reason why we may call this an outside return, because the market will print an outside pullback and return inside the momentum, inside the structure. Eventually it will find another pressure before breaking above the trend line. The market may feel some pressure there, but this is pure speculation at this point. Of course, I need to see to believe. No, I need to see, first of all, I need to see the violation of the trend line. I need to see how the market will behave as soon as it approaches the 88.6% Fibonacci level. So if we need a price for that level, 51,473. So that's the price, exact price where the pattern will complete. Of course, as the same for the cipher pattern above, printed at 78.6. We need to see the price trading below these previous structural lows in order to invalidate the pattern. So until there, the market can be pushed and complete. The market will complete the pattern, be pushed to the previous structural lows, and then recovering from these lows. So let's not be surprised by that price reaction. But the pattern will complete at 88.6% Fibonacci retracement level. So if the market decides to push into these lows, that may complete the pattern. We observe the market conditions, and that may offer an opportunity to go long with Bitcoin. Of course, as I said before, and I shared it before multiple times, I suggest, when we trade harmonic patterns or advanced pattern formations, I suggest to use the first target as the first zone where we start to close our trade, or close a portion of our initial position size. And then if the price decides to trade the second target, the golden Fibonacci level, we start to trail that position with a trailing stop. Of course, after partitioning another portion of that trade, after closing another portion of that trade, we keep 1/3 and last portion of the initial position size with a trailing stop behind, supporting the the next momentum, if that is the objective, of course. So this is my view for Bitcoin. So I will not be surprised to see the market ignoring the formation of the pattern and trading above immediately. So pay attention to this trend line support, the fractal resistance, and the weekly fractal actually above. So violation of those levels should trigger more upside momentum for Bitcoin. Ethereum, I was also the same way. I was expecting the cipher pattern on Bitcoin. I was also expecting some pressure at this trend line resistance for Ethereum, but as we can see, the market completely ignored that trend line at some point. Not ignored, because we have a small pressure zone here with the market being pushed a few points below, but then immediately recovered and with a strong upside swing. So what we are seeing at this point for Ethereum, first of all, we are trading the previous structure support. So at this point we are kind of rejecting to recover above this. Actually, we have a weekly fractal resistance, the previous structure highs from February. So that being said, we are threatening the recovery of the weekly fractal for the 2036. So basically, if the market decides to reject this level, I believe it may search for the 200 moving average approaching from below. Note that we are talking about 2 hours time frame charts for Bitcoin and Ethereum. So what I want to show you here is an extension of the very last swing high. So we have this pullback followed by new highs above. So I want to search for a specific Fibonacci level or a specific range between extensions. So I want to search for an extension of the last swing high, and I want to search for the 161 to 24% Fibonacci extension. And this last swing may and eventually, if the price decides to pull back into these, actually, as we can see, we have kind of a convergence between the eventual bullish sharp pattern at 161.8 extension, daily fractal resistance, the previous fractal resistance there. Actually, this fractal is already adjusted to the previous or to the most recent high. So this is the previous daily fractal resistance. Actually, we can update those levels immediately. We have actually the most recent fractal support at the most recent lows. The daily resistance, actually this is the weekly, I want the daily fractal here. And in fact, the most recent 4 hours fractal, it's also positioned at the high. So what we have here is one eventual bullish sharp pattern at the golden Fibonacci level, and as we can see, that will put the price trading again the previous structural resistance, the highs of the let's say the highs of the right shoulder, and let's not ignore the level that where the price has found some support. So even if limited to these highs, we don't know if the price will keep trading higher from here, but previous structural resistance turned into a support, a bounce, and we are now threatening not only the recovery, as I said before, of that fractal resistance. When I say the recovery, because it's a resistance, I'm saying more bearish momentum, so the recovery of the fractal, not the breakout, not the violation above the fractal. So the recovery of the weekly fractal may suggest more bearish momentum, and that can complete the bullish shark pattern below. 200 moving average approaching from below also, so that there's some convergence there, and we can also push our retracement tool and try to search for convergence between some of the most recent levels. So if I need kind of a cluster, let's search for an extension from this swing also. Let's search for the default extensions for these. Let's delete the 113 that I don't need. Let me just push also an internal extension, and let's try to search for some convergence. So what we have here, let's draw this like this. So we have the external extension and the internal extension, and this one with extensions below blue, the 150 and 161.8% Fibonacci extension of the internal extension. The external swing, this one projected here between 127, 141, 150 and 161.8 extension. We have clear convergence between the 127% Fibonacci extension of the very first swing low and the previous swing high. Okay, we have that convergence, and we have that box. So we have a cluster box, a very interesting cluster box here for Ethereum. So if the market falls into this price zone, there is a higher probability for the market to bounce from these levels. So we have a nice cluster, very nice convergence between those Fibonacci levels. We have the 200 moving average approaching from below, also pointing to the same price zone. We have the previous structure trend line resistance, which may offer some support, and we have also the 38% Fibonacci retracement a few points below that cluster, so we don't ignore that possibility also. Okay, so we have kind of a cluster. If I need to draw a cluster, let's say between the 38% Fibonacci and the golden Fibonacci extension, so that's my range where I believe the market may feel some pressure if reached. We never know if the price will achieve those levels. We will trade those levels, but if the market decides to trade those levels, and for that to happen, we can project kind of a symmetrical pattern or a symmetrical three-wave structure, which will put the price, as we can see, trading very close, if not right above that trend line. Exactly. Okay, so I will not be surprised to see Ethereum trading back to this 200 moving average on a 2 hours time frame chart and a retest of this trend line resistance, which may act as support, converging with that fine cluster zone between those Fibonacci levels. So that being said, that finishes my crypto presentation for today. So I hope for those who like technical analysis and who like to follow the crypto markets, I hope you enjoy. Let's jump into the Forex market, into some of those charts that I shared before. In particular, the euro versus dollar. I need to decrease my time frame again. 2 hours time frame. I shared this as a potential bearish shark pattern or a potential pressure zone for resistance. Of course, at this point I need to adjust those target zones, or that target zone to the most recent high. So eventually, if euro dollar needs to find some support, I can see 118.34 as the next pressure price zone. Previous structure resistance should be turned into a support. Let's see if that will happen. Australian dollar, Aussie, taking too long to abandon this zone, this price zone. We remain below this. We can consider this the next zone for the higher time frame or the higher degree heads and shoulders. But as I shared yesterday, also the potential inverted heads and shoulders here. So kind of a tricky chart to trade, or tricky analysis to trade at this point for the Australian dollar. But one thing is certain, so if the market decides to trigger the inverted heads and shoulders, we may see the price being pushed into those levels, 77.59, as I shared yesterday. For now, we're still trading inside this range between fractals, nothing happening at this point for the Australian dollar. We can go into a lower time frame, but it will be even more confused if you start to decrease your time frame at this point, because eventually you'll see this as a potential head and shoulders again, and you will see this as a left shoulder and the neck, the head, the neck zone, the head again. Well, we will be stuck inside this range. So I prefer to wait for the violation of the previous structure highs, or the most recent ones, that we should trigger the inverted head and shoulders, and that may invalidate the potential for more bearish momentum for the Australian dollar towards the 200% Fibonacci extension, as I shared before, because we're still trading below this neck zone, this ascending neck zone, let's say, and the trend line support, in fact, and it has been used as element of resistance, as we can see. So I will not be surprised to see the price recovering and trading these highs again, which may invalidate the potential of more downside momentum for Australian dollar. New Zealand, as I shared before, I was expecting the formation of that shark pattern at the golden Fibonacci level. We're still trading inside. Not actually, the market has printed. We have a new low. We have a new fractal support below, and I believe this is our daily resistance already, and in fact both daily and 4 hours fractal resistance. From this point, and because we remain, the price still trading below this 200 moving average, so I need the recovery of that moving average, which should be synced or convergence with the breakout of this descending trend line. So if the market decides to trade or decides to break above this structure, I believe that should trigger more upside momentum for the New Zealand versus dollar. I also shared the potential formation, or let's say the eventual formation of the shark pattern below, so that remains as a valid option. So if the market decides to be pushed to new lows below the daily fractal and weekly fractal support, if that happens, we may see the formation of the bullish shark pattern, the major one, this higher degree structure event. If that happens, that should provide some. Well, the pattern will suggest a bounce if formed. That's the correct way to say it, and it will suggest, I'm not sure if I shared this yesterday, but if that happens, if the market prints the shark pattern below, that will suggest a bounce towards the 50% Fibonacci retracement level. So let's stay tuned for that possibility. Nothing, it's not impossible, since the market is building kind of a sideways and a correction inside each channel, or kind of a sideways moving process at this point. So I will not be surprised to see that, very similar to the previous structure, where the market stays for a specific period of time trading sideways inside a range. That may happen again. So, and the new low should be followed. Australian dollar versus the New Zealand, nothing specific to see. CHF, yesterday we were approaching the 38% Fibonacci retracement level. This is actually not this is a 23% Fibonacci. This is a very first Fibonacci level. Actually, let me delete that level, I don't need it. This is a 38% Fib, the default target for the major crab pattern printed above at 94.60. So this was the first pattern that I projected above at those levels. Then when the price builds this structure above the daily fractal support, I started to project also the possibility to form this minor crab also above, and that one already trading the 78.6, so basically beyond my default, or our default targets for the pattern. 38 golden fib as second target, so we are already trading the 78.6 on CHF. Nice Fibonacci eventual pressure zone. Let's see if that actually the market has already felt some pressure once touched the 78.6% Fibonacci retracement level. Let's see what will happen from here. But I still believe it's possible to print new lows below this daily fractal, this previous structure fractal support, just by a few points, in order to trade those that measure 38% Fibonacci retracement level. So let's keep that in mind. 91.99. So that's the default target for the bearish crab pattern printed above dollar versus CHF. Of course, as I said yesterday, if that happens, that will suggest also more upside momentum for euro versus dollar, which has already completed the bearish sharp crab pattern, as I mentioned before. So inverted with CHF. So if euro dollar starts to fall, of course, CHF will bounce from the 78.6. Okay. Canadian dollar, I shared yesterday the possibility to form the golden Fibonacci, the shark pattern at the golden Fibonacci level. So the very first level of pressure for the shark pattern to form the shark pattern. As soon as I shared that possibility with you, the market enters into this sideways moving process. Well, we have the most recent price action inside this range. So it's still possible to form the shark pattern above, and eventually even higher at 127.09 to 24% Fibonacci extension level. But let's keep in mind, we have the first Fibonacci level as a potential pressure element right above the previous structure highs, 126.52. So this is the bearish shark pattern completion point. Let's see what the market will print there. As I shared yesterday live, I believe I shared this trade setup. I shared this one with my subscribers. We entered this trade for the long side, so we have our default targets positioned at 153.67, the 38% Fibonacci retracement level. Actually, let me correct this because I need a small adjustment here. and it's blocked. I need to adjust my Fibonacci levels to these lows and my targets with a small adjustment already. So if the market decides to trade those levels, I will start to partitioning my trade. I will break even my stops. I will move my stops to break even, and I will be focused on the second target for the pattern, the golden Fibonacci level. If reached, I will activate a trailing stop from break even, which should follow the next momentum. So if what that means, if the market decides to trade above the golden Fibonacci retracement level, my stop loss will move from break even to this price zone. So if the market decides to break above the weekly fractal, the same proportional market behavior should be followed by my trailing stop. At some point, if the market trades above these levels, my stop loss will be positioned at this point automatically. That doesn't mean we can't adjust our stops. We can adjust our stops accordingly to the price action, the price structure, the price builds during this process. If that happens, it is pure speculation. But imagine a situation where we have the formation of kind of a channel here, and the price is trading already above the golden fib, above this channel, and breaks above this channel with a very strong swing. So let's say the market breaks these. The market breaks this channel with a strong and fast swing high and prints new higher highs. So at that point, and because we are trading above the golden Fibonacci level, my stop loss, my trailing stop, will follow that same proportional market behavior and will adjust my stops automatically. So, but I can later, I can take my stops and adjust to the structure that I want to respect. So if I see a pattern, if I see a market behavior where I'm able to say, okay, if the market decides to break below these levels, I'm out, because it will break an important structure support or an important structure resistance level. Or even if I want to say, okay, if the market decides to recover below that weekly fractal, I will jump out this market. So I want to remain above these fractals. At some point, if the market decides to trade higher, I can set my stops below the fractal and say, okay, if the market decides to break again or to recover those structural resistance again, I'm out. But for that to happen, I need to see the price trading at those levels first of all, and that's not the case at this point. So at this point, we're still trading green, but far from our default first target. So first of all, we need to achieve the first target to break even our trade, to start the partitioning our initial position size, and then we will keep the partitioning strategy at the golden fib with a trailing stop behind our with a trailing stop behind supporting our trade. The Mexican peso, as I shared yesterday, also let's increase this time frame. I prefer to wait. As I said, I want to see the markets trading these cluster box or this cluster zone between those Fibonacci levels that I showed you yesterday. So, and eventually the formation of these major bullish bat pattern below, or bullish Gartley pattern, as I said yesterday, between the 127, the Gartley pattern, and if pushed a few points below, I will meet this. I can accept this as a bat pattern because the market fails the golden Fibonacci extension, as I said yesterday. So that's one of the criteria to see the formation of the Gartley pattern. I need to see the price also filling the golden Fibonacci retracement at this point, very similar to the one at the bottom. So we have support at the golden Fibonacci retracement level, the 61.8% Fibonacci level, and the same is required in order to identify later the Gartley pattern at 127% Fibonacci extension from this swing low. So this entire swing projected below. So I want to search for the 127% Fibonacci extension level of this swing. So we have that convergence between the Gartley pattern completion points, the 127, 1991, and not convergence, but we have a nice cluster zone, nice convergence there, but we have also the possibility to be pushed a few points below to the 88.6 because the market fails one of the criteria to identify, to validate, let's say, to validate the Gartley, to validate this shape or this pattern as the Gartley pattern. And it's important for both of them, both of the patterns, in order to invalidate, they need to break below the monthly fractal previous structural lows, starting point of the pattern. So that being said, we need to see the violation of that fractal support in order to see to invalidate the pattern. So that being said, we can see the patterns being formed inside this range with stops forced to be positioned below the monthly fractal. So if you want to trade harmonic patterns, you need to understand where they will invalidate. So the only thing that you can do is to adjust your position size, your number of lots, your units, whatever you trade. I trade based on units, but you need to adjust your initial position size accordingly to the risk percentage that you want to assume for this trade. But you need to respect the price action and the price structure. So if there's a pattern to trade, if there's an harmonic pattern to trade, you already know the price. If the price decides to be pushed below that level, you need to put your stops below this structure support level. So this is Mexican peso. Let's see what will happen. Nothing in specific for dollar versus yen. I shared this chart last week. We still threatening at this point we are threatening the recovery of this trend line resistance. This is a trend line covering the previous highs from 2016. So the market has, as we can see, has printed a new daily fractal above, and it has recovered, as I shared before, the potential recovery of this monthly fractal resistance as an horizontal resistance, and the potential fall from these levels back to the 38% fib, so back to 107.76. That is what I'm expecting. But let's see if this smaller, let's call it a lower degree trend line support will not act as a support again. Let's see if the market will not find some pressure at those levels for dollar versus the yen. Another short that I shared among my subscribers, we shorted this bearish cipher pattern. Another one that decides to respect the previous structure highs and the starting point of the pattern, as we can see. So it's important to keep that in mind. We need to stay loyal to those levels, because the market may threat your stops if you don't respect the structure. The pound versus the yen, in this case, it remains above this kind. For now, it's a potential or one eventual trend line support. So we are now threatening or kind of reinforcing that eventual trend line support. Of course, if the market decides to, as I said yesterday, I believe if the market decides to break below this daily and weekly fractal support, we will see the price being pushed even lower. So if that happens, we may see the price trading the 38% Fibonacci retracement 142.23 back to the previous structure in major fractal resistance. Let's see if the pound versus the Japanese yen will also start to fall. Aussie or Australian dollar versus the Japanese yen. Nothing specific at this point. Let me just draw another possibility here, because we have these new highs. Let me search for some convergence here. 78.6 perhaps. 78.6 converging with the golden Fibonacci extension. So let's not be surprised to see Australian dollar versus the Japanese yen also searching for support close to the previous structural lows. We have also previous support nailing that price zone, 82.72, as we can see, 82.77. So that being said, we have nice convergence here between previous structural lows, Fibonacci levels, extension levels, and retracement levels. So let's pay attention to that price zone. And of course, if that happens, we have a major ascending trend line support covering this or holding those previous lows, which may be reinforced with that pattern. So let's see if the market will find support at this price zone. If that happens, it may offer an opportunity to go to trade higher with the pair, of course. And as always, we don't expect that specific pattern to offer me a millionaire run. Okay, I'm not expecting to see the price rallying for the next 12 months from this level. We need to respect the pattern and the default target for that pattern, and that pattern will suggest nothing more than a 50% Fibonacci retracement from these highs, from these highs to the completion point. So we need a retracement back to the 50% Fibonacci level, and if, first of all, if formed, the pattern will suggest that retrace, that bounce, and if that happens, that will also triggers our management strategy. So we will do the same that we will do always. So we start to close a portion of our initial position size. We will move our stops to break even, and we will try to guide that trade if possible in the direction the market wants to guide us. If the market decides to go there, we will ride the market with pleasure. If the market decides to print the 5-0 sequence, as always, as I usually call your attention for, we have this swing. Let me delete this arrow and change the color here. So we have this previous swing, if followed by an extension and by a bounce, that sequence forms the bearish 5-0 sequence. We may see after the formation of that pattern some pressure as resistance. We may see the price trying to fall again. I'm not saying the price will, and again, we don't take those assumptions, okay, but we know the price will complete that sequence if at those levels, and that may offer some pressure as resistance, which should force, of course, the price to fall, even if for a limited period of time, and eventually just a retest of the lows, or eventually just a smaller retracement. But usually that may offer some pressure if that happens. But nothing assures us that bearish 5-0 sequence will be formed. The market can also print the shark pattern at the bottom and try a retest of the weekly fractal. Why not? That will not be a surprise. But again, for now at the, let's say, the short term, I'm expecting bearish, more bearish momentum for Australian dollar versus the Japanese yen. Another one that I shared among our subscribers or my subscribers on Telegram, I shared that short opportunity from the golden Fibonacci level as I shared yesterday. This is nothing more than the 2618 trade setup. Ultimately, we will see the price forming this sequence, this symmetrical ABCD pattern or a symmetrical three-wave structure. Of course, we need to see the price keep falling from these levels. I have my targets already. We are trading very close of my first target, and I have my second targets close to the previous structural lows, and I will try to manage my trade. If that happens, I will try to manage my trade into a third target at this symmetrical projection below. CAD versus yen, nothing in particular, just the fact that we are now threatening the violation of this ascending trend line support, which should trigger downside momentum. Let's see if that happens. For now, nothing, not confirmed yet. We are trading below that trend line support, but I need to see the price actually rejecting again that trend line. Eventually, you can go into a lower time frame, and we can see that the price is starting to feel some pressure there. So if that happens, if the market decides to reject this trend line resistance, let's admit, if the price decides to trade below the most recent lows, that should trigger more downside for sure, because this, for now, it can happen as a false breakout of the trend line, a false breakout of the previous structural lows, the most recent ones, and if that happens, a bounce will not be a surprise. On the other side, as I said yesterday, a violation of these lows, or let's say a violation of this structure, may suggest more downside momentum, and if the price decides to approach those levels that I shared yesterday, 84.70 and 83.31, we may see the formation of the bullish shark pattern also. So that may also offer some pressure at those levels. Euro versus the pound, higher time frame. I was expecting at some point, I started to project the potential bullish pattern at 84.47. We have a nice descending wedge, a violation of that wedge forcing upside momentum. At this point, I will not be surprised to see the market searching for the 200 moving average approaching from above, pointing to 88.14 and or the 38% Fibonacci retracement level at 88.65. In fact, let me correct this, because if I want to identify the potential target for this shape or for this pattern, the pattern was invalidated because, as we can see, the market was pushed quite below the completion point. But if you want to, and because we have a monthly fractal there, so that's that previous structure highs, I will not ignore the 38% Fibonacci retracement from this fractal, which may converge with the 200 moving average. So if the price decides to approach that Fibonacci level, we may see also the 200 moving average approaching that same price zone. So we may see some convergence between the Fibonacci level and the 200 moving average. So if that happens, that may offer some pressure and some resistance there. But I will not be surprised to see that happening because we have the violation of this descending channel. So another thing that can happen is a retest of that channel, a retest of this descending channel, and if rejected, we will search for opportunities to go to trade higher with the pair. So if the market decides to come back, retest the structure, the trend line, and starts to bounce again, as soon the market starts to approach the most recent highs, okay, as soon the market starts to approach the previous structure highs, we may see an opportunity to trade that breakouts. So we can see eventually the market trading above previous structure highs, back to previous structure resistance and turning into a support, which may trigger a trade towards the 38% Fibonacci retracement level. And note that we are talking about a higher time frame. This is almost a daily. This is a 12-hour time frame chart. So, and that represents this trade represents nothing more than 100 points, 90 points above your entries. So of course it may offer an interesting opportunity to go to trade the breakout of that structure. But for now, as I said, I'm targeting that 38% Fibonacci level. I will not ignore the possibility or the possibility of a retest of this trend line resistance, turn it into a support, and if the market decides to trade above these highs, we can wait for a retest of that structure, turn it into a support, which should trigger upside momentum. And again, I'm pointing to the 38, but nothing assures the market will trade even higher and try to maximize your profits there. Euro versus the Australian dollar. 1 hour time frame, I was expecting the formation of this butterfly pattern above. It seems like the price is rejecting that idea, at least for now. I need a bounce from this price zone in order to complete the pattern in time or before it starts to vanish with the ratios. So if the market decides to push even lower and breaking previous structure highs and and lows, previous structure resistance and support levels, if the market decides to violate all the previous levels, eventually that pattern will start to fade. So I need that pattern to be formed and I need kind of a bounce from this trend line support. We have kind of a trend line here. We can draw kind of a trend line support here. Actually, not quite a support trend line. Of course, the major one is this one, so I will not be surprised to see a price retesting this trend. But if the market decides to push into these lows and eventually searching for the 200 moving average approaching from below, if that happens, that pattern will start to vanish. So eventually I will not target anymore the butterfly pattern above. So in order to complete that pattern, I admit I need to see a bounce. I need to see a bounce from this previous structure resistance, so that I need to turn this into a support level. I need to see that happening. If that fails, I will ignore the potential formation of that pattern. I will try to identify other patterns euro versus the New Zealand, very same or almost the same expectations. Here I was expecting the sharp pattern at the golden fib, the very same expectation now. If the market decides to bounce and to form a new high just to complete the pattern, that may offer a short opportunity. If the market starts to being pushed even lower, that starts to vanish and eventually will not the pattern will not complete. Pound versus Australian dollar. I believe this is a 4 hours time frame. No. So I shared this yesterday as the potential formation of the right shoulder at that point. At the time that I shared that chart or this chart, we were trading this price zone. The market was forming this week at this previous structure support level. I was saying this should act as a resistance, and if that happens, that may form the head and shoulders. That being said, I believe the market is now moving towards the default target. Actually, the market is, in my point of view, that may trigger the edge and shoulders formation. So we are seeing now the validation of that pattern, which should be followed by more downside momentum, of course, and with default targets at 178.07. As I said before, or as I said yesterday, we have also the bullish cipher pattern at 7909. So let's pay attention to this price zone. I'm not saying the price will bounce from these lows. Actually, I'm not saying nothing. I'm just projecting a pattern that I don't know if it will be formed. I don't know the outcome of the pattern. Let's observe for now. But if that happens, if the market decides to print that pattern, that 78.6% Fibonacci retracement level, and if the market decides to bounce, we may see a retest of this next zone, of this ascending trend line support as a potential next zone for the heads and shoulders. So again, I believe I called your attention yesterday for this previous structure, lower degree trend line resistance. So if you see the price here, we have kind of a trend line. We can cover these highs with the trend line, and with the price now threatening the breakout of that structure, and we are now facing that same trend line resistance. So for now, we are actually, the market is retesting, kind of retest of this trend line resistance, turn it into a support. It will be it's necessary to turn it into a support in order to bounce from this price zone. Or let's reverse this. If the market bounces from this level, it's because it turned that trend line resistance into a support. But well, that being said, that's my view for the pound versus the Australian dollar. I believe there's room to form the cipher pattern, and eventually a retest of the next zone, 38% Fibonacci retracement level. Of course, a bounce from this bullish cipher pattern will suggest more upside momentum inside this ascending channel. So eventually we'll see the price scaling even higher from these levels. I'm not saying it will, but there is a probability for that to happen inside, if the market decides to keep inside this ascending channel. The same way, there's also the possibility to form the pattern, to create kind of a bounce, and then new lows for the pair, and eventually just to target the previous structure support level, previous structural lows, and the default target for the inverted edge and shoulders. So this movement will not invalidate the inverted edge and shoulders. In fact, that may act as a retest of the next zone, and followed by new lows for the pair. So let's see what will happen. For now, I'm focused on this 7909 as the potential bullish cipher pattern completion point. And also pound versus the New Zealand. As I shared yesterday, we have targets for this technical double top, or the 2618. Also, we have targets for the technical double top at 9401, and we have kind of a symmetrical. Yesterday I was wrong. Yesterday I was calling this a 2618, but it's not a 2618 because the price didn't violate the next zone. So we need the violation of the next zone to confirm that technical double top, which is now happening. So I believe the market will be pushed even lower from here, and if that happens, I believe the market will target the default projection for the technical double top formed above. So this is the 200% Fibonacci retracement level. Let's see if the price will trade those levels. So that's what I'm expecting after the formation of those patterns. So yesterday I also shared the possibility to form this shark pattern at the golden fib. As we can see, the price nailed that golden Fibonacci at 92.15, and it has started to bounce. So again, I don't know the outcome. I don't know if the price will respect the expected outcome for the pattern, but we have let's say there's potential for that to happen, for the market to search for the default targets and forming the bearish 5-0 sequence at those levels. So I remain I still waiting for the Dixie at 92.78. So I believe there's room for that to happen. 200 moving average also pointing 92.83, and this is the 50% Fibonacci retracement. So that's the default target for the shark pattern, which will complete. Actually, this is not the shark pattern. I'm wrong again. So this is the crab pattern at the golden fib. So I will not target. Dixie should not target the 50%, but it should target the 38% Fibonacci level, not the 50% fib. Few points below. So this is the default expectation for the Dixie. Let's see if that happens. Now, metals, gold. I also shared this yesterday as a possible or one eventual technical double bottom for gold, and we remain threatening the next zone. Simple way to project the default target for that pattern is to clone the same distance between the close prices of the structure below, and that will give you a default target zone for that specific technical double bottom. For now, I believe that should trigger the violation of these lows, should trigger the pattern. Silver, and for silver I think I deleted all my charts here, or my draws. We target Fibonacci shark pattern extension levels as always, 161% Fibonacci level, and 224% Fibonacci extension level. So we have one first swing high followed by a pullback, new highs, golden Fibonacci, bounce, 224, bounce again. Okay. As I shared yesterday, let me recover that chart for you on silver. Silver harmonic patterns, open new it's so annoying, this chart. That was the cipher pattern that I shared yesterday with you. I need to draw it again, and I need it, but I was trying to search for that chart with all those levels already. $78.6, 26.03, $26.03 bearish cipher pattern on holds. That's what it is. We have that cipher pattern projected at 78.6% Fibonacci retracement level. So if that happens, if that pattern forms, or if the pattern completes, it will suggest another retracement for silver. And crude oil, in this case represented by West Texas Oil, Owanda broker. As I mentioned yesterday, the market still respecting this technical double bottom printed below. Let's wait and see what will happen. for now there's nothing to, I have nothing to say for now. Very nervous price action at this point. We need to wait for one of two things. One of them, the violation of this descending trend line resistance. The violation of that trend line may offer more upside momentum, or the violation of the technical double bottom, which should trigger more downside momentum. As I shared before, on a daily we are seeing also the possibility for the edge and shoulders. Okay, on a daily, if you go on a daily time frame chart, it's I believe it's clear. Actually, let me decrease that into 12 hours time frame. So we have kind of a left shoulder, the head, and this price structure as resistance as the right shoulder. So breaking below the most recent lows should trigger more downside for crude oil. Let's wait and see. SPX 500, as I shared before, I shorted this one. I have my stops positioned above. This is a small position size trade that I pushed, so I need to rely on those levels. So I believe that there's still possible to see SPX falling from this price zone, taking into consideration the bearish pattern formed above. But as you can see, risky trade, of course, on a very strong bullish momentum, trying to catch that reversal. Sometimes it's not easy. Actually, it's never easy to try to identify those levels, and to get involved with those even harder. But let's see. DAX, nothing to say for the DAX at this point. I admit the pullback to the previous structure resistance levels back to 1509 or 1505. I admit that possibility. On a weekly time frame, I have another provider here which may give us a nice picture for the DAX. This is a daily time frame chart, but I projected also that major higher degree bearish scrap pattern at 17,451. So note that we are trading the default target for these inverted edge and shoulders, these lower degree inverted edge and shoulders. We are trading that price zone, so that default target price zone. So I will not ignore the potential pullback or a relief for the DAX after this strong momentum. I will not ignore that possibility, but ultimately we will see, of course, on a long term. This is a long-term kind of a projection, but on a long term, I admit also the possibility to form patterns above, and specifically the bearish scrap pattern at 17,451. The next one that I want to show you is nothing. Nasdaq. Just to actually finishing with Nasdaq, I already covered the Bitcoin and Ethereum. We have also Nasdaq, not because we are trading the default target, not because we are trading that bearish or this bearish pattern territory, but just because we have reached the default target for this bullish 2618 trade setup. I shared this morning on Twitter a chart that I shared once the price was trying to break this trend line resistance. So we have this resistance covering those highs, and the price was threatening the breakout of that structure. So I shared that as a possible breakout above the structure, exactly what that means, saying, okay, if that happens, eventually the market will target the default target for the bullish 2618 formed below. So we have a technical double bottom confirmed by the broken neck, resistance and a retracement back to the 61.8% Fibonacci retracement level. That forms the bullish 2618 trade setup, and that setup will target the formation of one ABCD, kind of a symmetrical ABCD pattern. So as we can see, the price has during this process, it has completed the sequence, and it is trading at least for now, it is trading the symmetrical ABCD pattern projected at 13,720. So that's what we have for the Nasdaq, which is now building this kind of let me call this expanding structure with the price printing new higher highs and new lower lows. Let's see if the price fall into a new if the price starts to fall into a new lower low. Eventually that will print a 5-wave structure. If the market decides to fall from these highs, eventually the market will print this type of structure above that golden Fibonacci extension level. This was, and it remains as a possibility, the completion point for the crab pattern. Of course, the market is already trading quite above that completion point, but we will not ignore that possibility, since we have completed also that symmetrical ABCD pattern, so we should not ignore that possibility. If that happens, we will pay attention to this type of structure, which may be reinforced later as support, if that is the objective. Of course, we don't know if that is the point, but we need to start to make some assumptions based on what we have and based on the criteria and variables that we have at our disposal. So, my dear friends, I hope you enjoyed this video. Once again, I hope you keep learning those processes, keep your motivation on higher levels. Everything takes time. Everything is possible. Nothing it's impossible when you dedicate yourself to make things and to turn that a reality. So keep studying those processes, keep learning those processes. And that's all for today. I hope you enjoyed this video. If you enjoyed, please press that like below the video. Subscribe the channel in order to get your notifications once I publish new content here, and because it's important for me to get your feedback in that way. So like the video if you really enjoyed the video. If you don't enjoy the video, of course, don't press that button, but try to search for for a better content, the content that fits you on other person. So try to search for other person who provides you with better information for you, because I believe sometimes I will not be the information that I share with you will not be so let's say will not be convergent with your personality at some point for some reason. I don't know, but I'm not let's say I'm not expecting everyone to understand my thoughts, my ideas, my concept, my strategy, my methodology. I'm not expecting that. But if somehow that helps you to create a strategy to get involved with the market, that is my point here. And if that somehow I'm capable to provide you some useful information, that's my goal here, and that fills my expectations. So that being said, I hope you enjoy these videos, and I hope to see you here next time. All the best for you and all the best for your families. Stay well, trade well, and trade safe.